Special episode of Turning Hard Times into Good Times. I'm speaking with Eric Coffin on this, the 30th day of March, 2020. He is the editor of Eric Coffin's HRA Advisory, also known as a Hard Rock Analyst, and you can go to hraadvisory.com to sign up for Eric's letter. Welcome, Eric, and thanks for joining me at the time. I know you're very, very busy with all that's going on. But taking the time to talk with us at a time when people are very concerned about all that's going on with COVID-19, as well as the impact it has on our daily lives and our investments. So thanks so much for taking the time to be with us today, Eric.
Well, thanks for calling me, Jay, and I'm glad to hear you and Grace are safe and sound. And yeah, it's quite busy. I got lots to do, but not many places to go.
Yeah, that's right. We're sort of
place to go anywhere. So.
Sort of welled up, aren't we? And in our homes, and going out for groceries occasionally, as infrequently as possible, and taking all the precautions that we need to take. So you never know. You have to. I think at first my inclination was not to take this as seriously as I should have, but I think it was once you start seeing and hearing about the terrible nature of this disease, when people get it really bad, it's nothing to fool around with. So. So let me ask you, Eric, how are you and your two children, Ben and Emma, and how are all of you doing?
I mean, everybody's fine. Ben's being responsible. He had what we're quite certain was a head cold last week, but because of what's going on out there, he just said, "Look, I'm gonna lock myself in my bedroom for a week because I'm not gonna go out and risk anybody else on the unlikely event that it was that flu." I mean, Emma's fine. I mean, obviously she's in law school, but the law school has switched everything over to video lectures. Nobody's going to the campus. I don't know what they're going to do about exams, whether they just put them off or they find some way to do those. She thinks they may even do the exams online somehow.
Yeah,
and that's basically how everything will get finished off.
Yeah, is she in her final year of law school, Eric?
Yeah. She'll be doing her, in theory, she'll be doing her final exams by the end of April. But it sounds to me like maybe the profs will do them online. She was pretty sure they were going to switch to pass-fail because they obviously don't want 50 people in a room writing an exam. They'll have to do it distance learning somehow.
Yeah, and your mother's okay as well?
Yeah, she's fine. I mean, she's in the west end of Vancouver, which is pretty densely populated area.
Yeah, good.
But she's basically staying inside, and her caregiver is the one who's been doing all the grocery runs and stuff.
Oh, that's good. All right. Well, first and foremost, of course, is the health of our friends and our family and all of that. We do, though, realize that it's having a major impact on the U.S. and global economies. I think that's fair to say. We don't. We saw the unemployment claim numbers the other day that just shot up beyond even towards the higher end of the estimates, and it's really quite alarming, of course. So the impact on the economy is going to be enormously detrimental. But do you have any thoughts on that?
Yeah, I was fairly early talking about this, and like you, I was trying to, you don't want to be panicking people by overplaying it. I was soft pedaling a little bit what I thought the initial claims would look like last week, because I was afraid they were going to look as bad as they did, and they're going to be worse this week. We'll see a pretty lousy non-farm payroll number on Friday, although I'd remind people that number, the way they calculated that calculation was actually done pretty early in March. So unfortunately, the one that you hear this Friday is not going to be the worst one. The one after that's likely to be a lot worse. What I think, going into this, I was hoping, and I'm still kind of hoping, that what we get is something where the amplitude is big, so it's a deep recession. I mean, and there's mainstream media is still talking about fears of recession, which is hilarious. I mean, we're already in one.
Yeah, for sure.
That's based on the case. What we're hoping is that, well, the amplitude is going to be large, the duration won't be. What I don't know, and this is my concern, is, really the businesses that are getting hit the hardest here are going to be the small one, the local one. By and large, those are not business owners that have got, cash reserves or the personal financial situation where they can just carry their employees for 2 or 3 months,
Yeah.
and for that matter, carry their business for 2 or 3 months. So there's going to be a lot of dislocation.
Hmm.
I don't know how many of these job losses are going to turn into longer term ones. I mean, how many restaurants and hairdressers and places like that
Hmm.
are going to close? And those kind of businesses don't generally get talked about much in the Wall Street Journal, but the truth of the matter is that is where most of the jobs are in the economy. So that's my big concern, is how much long term or even permanent job loss we get from these small businesses. I think the bigger ones that can kind of keep people on furlough, people can get some unemployment insurance. I think a lot of those jobs will come back. But what's still very difficult to determine, because we sort of have this staggered situation where China was first, then Europe, then North America, maybe South America and Africa is coming after it. You've got sort of this rolling pandemic, if you will. If you look at China, for instance, China, as we all kind of knew it would, based on what happened in Wuhan, their economy pretty much fell off a cliff in February.
Hmm.
The official word is like everything's back to normal and all the factories are gearing up and stuff. And like, okay, that they probably are, but the problem is most of their customer base is like North America and Europe,
Hmm.
and they're canceling orders. So, like, sure, these
Hmm.
factories are they've got nobody to sell to, and we're going to have that rolling sort of situation like that.
Hmm.
And I just don't know what the dislocation is going to be at the end. I think it's going to be significant. I'm still hoping for a short recession, but I'm a bit concerned we're going to have 2 really bad quarters, and then maybe 2 or 3 still fairly ugly quarters after that. I
Yeah.
mean,
Yeah.
it might end up being longer than I'd hoped.
Yeah.
We just don't know at this point.
Yeah, because we have such an integrated global economy now as well, and of course that probably helped to spread the disease more than, say, in the pandemic of 1918 or whatever, the Spanish flu and some of those things in the past. We didn't have the
Yeah.
same kind of interrelated global economy like we have now, and so the supply chains and all of that too are of great concern. I know when this thing first started, Quentin Henning was telling me it's going to be difficult to get pipe for drillers in
Right.
Australia from China because the company that was producing it was shutting down and so forth. So well, anyway, you talk to the companies that you follow that you write about up
Yeah.
there, and every situation is different. I believe in Quebec, the Quebec province shut the mining industry down completely. Not so, as far as I know yet, completely in Ontario. What are some of the other what's happening in BC?
Ontario, Ontario, it seems to be defined as more of an essential service, I guess.
Yeah.
They haven't moved to shut. Some mines have done it themselves because
Hmm.
if a couple of people on the payroll turn up with testing positive for COVID, then the protocols kick in and they slow down or shut the thing down. But Ontario things are sort of essential. I don't think they're defined as essential in BC, but the restrictions outside of Vancouver and BC aren't as strong. I've talked to a couple of guys. There's not that many guys drilling right this minute anyway, but the guys I've talked to, by and large, the ones that had fairly local drillers,
Yeah.
they've just continued to drill. It's a bit trickier when the drillers are coming in from some distance away, because obviously they're worried about their own families and stuff, so
Hmm.
they kind of want to get back to home base. I
Hmm.
have talked to a couple of companies in that situation. I know, like in Virginia, Ashland Bay has been drilling there, and
Hmm.
their drillers are the actual drill crews from Quebec,
Hmm.
and they've taken a pause after 10 holes or whatever they get done up to them, because basically the drillers are saying, look, we got to get back to our families, and we're
Sure.
concerned of being stuck on the wrong side of the border. And that's the issue for a lot of these guys. If everything's local, they seem to be carrying on, but anywhere where they're concerned about having to cross borders and travel restrictions, a lot of those ones are shutting down. So
Hmm.
I'm not expecting a huge amount of exploration news in the next little while.
Right. Well, I mean, for some companies, of course, they were, winding down anyway, and through the winter months and assessing their drill program, looking and planning for next year, and looking at results from last year, and so it's for those companies it's not a big deal, I guess, but others that are looking for news flow to keep people interested in their shares. That's another
Well,
story.
and the guys that have stuff in the labs, I do know that ALS, which is one of probably the second biggest laboratory group in the world, and I believe that the same is true of Bureau Veritas, which is the
Hmm.
biggest lab group in the world. Both of them are still operating, apparently.
Hmm.
I've had a couple of companies that have sent me letters that they got from the lab saying, we're going to continue operating for the foreseeable future.
Hmm.
They don't say whether I'm assuming it's reduced staff, like maybe a skeleton crew of some
Hmm.
description.
Yeah.
But just because of the way assay labs are set up, everybody wears protective gear anyway because of the kind of stuff you're dealing with, all the acids and the reagents and the guys standing in front of furnaces. So
Hmm.
they're saying they're able to keep working. I mean, obviously, if you're in a jurisdiction where they're just saying everybody close, they're going to have to close. But I was surprised to find that a lot of the assay labs are in fact still operating.
Yeah, that's my
So
understanding.
there
Yeah.
could be stuff trickling. If you manage to get stuff into the lab, there should be results trickling out of the lab
Yeah.
over the next few weeks.
Yeah. Well, there's certainly some of those companies I know I'm looking forward to. It is a problem when you go across borders. I think someone in the Yukon was telling me that some of their drillers come up from British Columbia or from somewhere else in Canada, and the Yukon, they're going to make them go into 14 days or 2 weeks of quarantine. So, you're going to send your drillers up there and they got to be quarantined for 2 weeks. You're going to pay them.
Yeah.
Just shutting down. So anyway, it's complicated, Eric.
Yeah.
I guess the big unknown is how long is this going to last? How long are these curves going to turn down? And we can start to approach or get back to work. And I mean, I just can't imagine the devastation this is having on the global economy, on the U.S. economy, and at a time when, I mean, and the debt, the financing needs of the U.S. Treasury is just going through this, going through the roof. And it's just so I have to ask you, I mean, how do you see this from a longer term perspective in terms of gold and the other metals even?
I think in terms of gold, I mean, to the extent, to use the phrase silver lining,
Yeah.
somewhat ironically in this case, I think it's going to be I think it's actually very positive for gold. I mean, this is a situation that's pretty much tailor made for the gold market. We've seen, if you look at the U.S. Fed, their balance sheet went up by about $1.3 trillion in the last 2 weeks. That's essentially equivalent to all of QE2. That doesn't count the stimulus package that got passed the end of last week. That's just what they've actually grown it by already. It doesn't even begin to account for what they're going to keep doing.
Hmm.
If this drags on for any length of time at all, I don't have a lot of trouble personally seeing the Fed balance sheet getting to 8 or 10 trillion. Like it's not if they want to get better.
Hmm.
That's going to be matched by similar moves. I mean, most of the world's central banks they're all sort of doing the same stuff to try to support the market. So the amount of growth in the monetary base here is just mind-boggling. And to me, I wasn't somebody back in 2008, 2009. A lot of guys, a lot of gold bugs, if you will, were kind of expecting a big reset back then. I didn't really think it was going to happen that time.
Hmm.
I'm not 100% sure it will this time, but I think the odds of it are getting much higher because when you get up to a Fed balance sheet or any central bank balance sheet that's essentially getting up to the size of the economy, I don't really know what the way out is, really, other than some sort of. I don't see the U.S. Defaulting, if you will. I mean, I know people talk about that, but I just do not think that's going to happen. Period.
Hmm.
The way to do it, in effect, if not legally, is to put some kind of a cap on yields. We might see this coming as we start coming out of this. The Fed might cap the yield curve and say we're not going to allow yields higher than say 2%. They intentionally let inflation run, and I think we're going to see some inflation creep in. There was inflation in the last 10 years, but it was in financial assets. It wasn't the stuff they count for CPI.
Right. Hmm.
I think we'll see more inflation going forward because of supply chain issues, and I think we're going to see a lot of onshoring. So a lot of companies that had supply chain spread all across the world, I think you're going to see a lot of that get pulled back in close to home. That'll be good. That could be good for U.S. jobs, but it's also probably going to mean higher costs. So I think we see more inflation. So effectively, the Fed defaults by default, if you will, by allowing inflation to run, capping yields, and essentially shrinking the value of the bonds that way. That's a backdrop that's very positive for gold. I mean, personally, I will honestly be very surprised if we don't see $2,000 gold price this year. And it may not take more than a month or two to show up. I think as soon as we get out of this liquidity seeking, get me the hell out of the market, sell everything phase that we're still sort of in,
right,
and we get into the insolvency phase, as I call it. And by that I mean people's concerns are insolvency, and people are recognizing that the central banks and the government are going to have to blow things up on the monetary and the fiscal side to cover this. That was sort of what we saw back in 2008, 2009. During the market crash, just get me out of here part, gold dropped. But as soon as people recognized that the Fed was just going to have to blow its balance sheet up and that Washington was going to have to pass a bunch of stimulus bills, things turned. And I think we're starting to see that. I think we saw the bottom in gold at 1450 a week and a half ago. I think that was probably it. I think we'll see a similar move to what we saw in 2009, which was gold went up 30 or 40% before Wall Street ended up bottoming. I mean, we saw a bottom on Wall Street last week too, but I don't think that's the bottom, unfortunately. I think the bottom is 20% below where we are now anyway.
Yeah, I tend to agree with that. Well, what have you told your subscribers? I mean, have you sort of telling them to stay the course right now, or if you have some liquidity to pick up some bargains? And if the latter is true, would you have a couple of names you might want to share with our listeners?
Yeah, I mean, a bit of both. I mean, I'd love to say that I was a genius and told everybody right at the top to sell everything, but I didn't, which is mildly frustrating for me because, as you know, I was expecting a recession this year anyway, even before this stuff came along, but I wasn't expecting anything as steep and deep and as fast as what happened. My take was, look, I mean, if you've got stuff in your portfolio, you can't even remember why you own it, and we probably all have a few of those, or one where you've got any kind of concern about management or their fundraising ability, this is not the time to own companies like that. So even if you're getting whacked doing it, you might as well just sell those, raise a bit of cash. Aside from that, the better run companies that are funded and have good management, to me, it feels too late to be selling those. I think certainly the producers and the developers and the successful explorers, I think they come out of this fairly quickly. And I think if you're feeling brave, I don't think you necessarily have to do it tomorrow. And if you're putting in bids, you put in stink bids. You might as well try to take advantage of a bad market. But companies that are funded, that have strong projects and good management, and at a developer, explorer, and a company like a Great Bear or High Gold, I mean, both of them have got great projects, really good management. They both have lots of cash. Neither of them is going to have to do any fundraising for the next year. Companies like that, I think, will come out of it well. Some of the smaller ones that have really just started to make a name for themselves, that have, they've raised money recently. They have some resources. They have high grade, like a company like Grand Portage. I mean, it's trading better than I feared it would, but I think it's because it's a high grade gold project. That's what people want. And I still like some of the, even some of the earlier stage guys, if they're working on what I consider, bona fide discoveries or potential bona fide discoveries, depending on who's actually got some assays already. Like a company like Aston Bay, I think those guys have got a bona fide discovery in Virginia. They did get 10 holes done, so they'll have some news flow. That's also a high grade gold project, which is obviously the direction I'm leaning in by and large. I keep an eye on a company like Northern Shield. I own a ton of it, but that one they have to show some grades and drill holes. It looks like they have an epithermal system based on drill hole descriptions, but that and $3 gets you a cup of coffee in the gold space, and you can
Yeah.
have assays. They're ready for assays. So I mean, I'm not sure. I own lots of it, but I'm not sure anybody else has to step in front of it before assays show up.
Hmm.
But it's one I'd certainly have on my radar, because
Yeah.
I think discovery stories, they do tend to have their own momentum. If you have a bona fide new discovery,
Hmm.
you can get some momentum even in a really crappy market, because
Yeah.
people love new discoveries.
Yeah, for sure. Well, you certainly have a lot of great ideas, and people should really consider subscribing to your letter. HRAadvisory.com is the place to go, folks, for Eric's excellent advice. Not only is he a great stock picker and approaches these stories from a fundamental perspective, he knows geology very well. He knows exploration very well, as good as anybody that I rub shoulders with in this business. And I have the highest level of respect for Eric's competence, and his really a smart guy. Any one last word, Eric, perhaps before we conclude our
I
discussion
think
today?
it's important to. I think it's important to try not to panic at times like this.
Yeah.
I've been, we both been through a few of these, Jay. They're never any fun, but in my experience, the worst that you can do in the middle of one of these things, from an investment perspective, is to panic. Because the truth of the matter is, when you sell when you're dropping down into a bear market, the theory is, you sell on the way down, or even three-quarters of the way down. It's great if you buy at the bottom. But the truth of the matter is, when you sell, I find most people, it's psychologically very difficult for them to turn around and buy the bargains.
Mm-hmm.
Sometimes you're better off just gritting your teeth
Yeah.
and getting through it. And a lot of times I found I ended up being better off in the long run by doing less. I
Mm-hmm.
mean, I'm going to look for bargains, but just, try not to panic. I know it's
Yeah.
hard not to in
Yeah. It's
situations
hard
like
not
this,
to. It's really hard
but
not to.
panic,
Yeah.
it is. It is.
But I was going to just
Um,
say, Eric, though, that I think your advice about, when you can't remember why you own something, and you look
yeah,
at the management, and they're not able to raise money and this and that, there's a lot of reasons that you might just be better off sometimes selling
yeah,
the ones that you think don't have much of a chance of recouping, and taking that, little bit of cash that you've got and put it into some of those others like you just named, Great Bear,
yeah,
High Gold,
exactly.
and
I
some of
mean,
those. Yeah.
yeah, it is. It is. When I say don't panic, I'm not literally saying doing nothing. I mean, the companies that guys who aren't going to be able to raise money in the next 6 months or 9 months, you're probably better off just taking the loss. I mean, it's not fun taking big losses, but
Hmm.
you'll find coming out of a bear market, you'll be very happy that you've got a cash cushion, because the truth is, when these things turn, they tend to turn hard. So
Hmm.
if you're in a position to be able to jump on a few things when that happens,
Hmm.
you're better off to get rid of the dogs now. Be
Yeah.
done with it.
Yeah, absolutely. Or they'll be barking at you later on when things are turning up, and it's better to have the cash. Good advice, Eric. I thank you so much for taking the time to talk with us. I'm glad you could do that, and we'll be looking forward to. I think I'm going to be joining you and Gwen and Brian London in a webinar, so I look forward to
Yeah.
that as well. Thank you so much. It's always great talking with you, Eric. Thank you.
Yeah. Thanks for having me on.
You bet.